you speak about how Indian pharma is now getting set to emulate what IT did. Did I hear you correctly? Is that what you were trying to say?
Yes.
Sorry, the reason I pose this question this way is because a lot of people believe that Indian pharma, in some sense, has already gone through a cycle of price erosion when they were at least exporting companies. So is that cycle about to change for those? And what about companies which are not necessarily US generic market dependent? Can you talk a bit about that?
So we tend to like exactly that, the US generic market. Okay, and there are a number of Indian companies and also the US companies who are a little wary of that space. But if you put if you put all the US companies who operate in the generic market out in the US, okay, a strange structure emerges. A lot of them are over leveraged. A lot of them have market capitalizations to debt of 0.5 or 0.6. Okay, that means, debt is higher than market cap by almost 2x. And that's not a sustainable ratio in a rising interest environment. So what created the pricing pressure in the generic markets and the hyper competitive intensity? There was too much of supply.
Yes.
Whether it came from the US companies or whether it came from the Indian companies, too much of supply. And I think we've seen the peak of that cycle now, because the US company's financial position doesn't allow for that. And in India also, the financial position of a lot of companies who've got US offshoots do not allow for that. Okay. So if you look at some of the commentary coming out of even the larger and the smaller companies, everyone is coming back to the Indian environment. So I think where the alignment of all pharma companies is, Indian markets are very profitable. The rest of the world markets are very profitable. The US market is not profitable. And using withdrawal of supply coming in that part of the world. And that's essentially what you want for the base to be formed. Okay, but none of the Indian companies are insolvent. So Indian IT went through a phase like this, I think, between 2000 and 2009. Okay, you had some very large acquisitions in the services place globally. There was EDS, which was owned by General Motors, which was acquired by one of the larger companies, and no one heard of this company ever after that. And you had a lot of other larger services companies that got merged and integrated. And those companies leveraged to buy these companies and couldn't pay back the leverage. And that's when the Indian IT companies stepped in and created the formats. Now, when you talk about Indian generics, it's no longer chemicals, because a lot of the manufacturing footprint that some of these companies have created is moved from just generics to injectables to biopharma. They just moved up the value curve. And they've done it and Indian companies have also mastered the art of being one of the cheapest manufacturers, whether it's fixed cost, variable cost, or everything that you want to offer. And now it's just volumes. So what succeeded with Indian companies in IT was volumes. What will succeed for Indian pharma companies is volumes. Do we have the capacity? We are up, ready, and willing to go. And we've got the balance sheet for it. Okay, and we will take market shares from that part of the world and from the rest of the world also. So I've got lots of, we have put in a lot of data on all of this. I'm happy to share that with you sometime.
I would love to, but since today we can't do that, but I'll take you up on that offer, Kenneth. I'm still trying. So therefore, thank you for that insight. I'm just trying to understand, therefore, would the set of winners that emerge from this be a completely different set of companies which don't necessarily have fairly large presence in the US currently? Because you mentioned that there will be some bit of withdrawal from that market which is not profitable. So what will be the set of winners from this?
The names are already there. The second largest, second, third, the number 2 player and the number 3 player in US generics are Indian companies.
Right.
Which are listed.
Sure.
Okay. And they've been the worst performers.
Sure.
Okay. So you already got those numbers out there. And then just look at the footprint of companies that are set and that have moved up the value chain in terms of putting your products into the marketplace and getting their registrations right.
No, sorry. Okay, I just want one more clarity then. Maybe I didn't understand this, but all through our conversations, I remember you telling me that companies which survive a down cycle and stay afloat
Mhm.
usually tend to be the winners when the
Yes.
cycle turns. My
Yes.
question is this time around, are those the companies that will do well, or because there are other companies where balance sheets will be healthier because they don't have a presence thus far in the US will be the winners? Indian
No, no.
companies.
There are Indian companies that have survived the down cycle both in the US and the Indian companies and have great balance sheets to also will be the winners in the cycle.